Hey there, and welcome. So, have you ever felt that sudden, stomach-dropping wave of panic when your accountant casually tosses out terms like accruals, reconciliation, or, brace yourself, double-entry bookkeeping? Or, maybe you're out there hustling, running your own small business, and you have absolutely zero idea why the profit on your computer screen doesn't match the actual physical cash in your pocket. Well, listen, you are definitely not alone in that. I am so glad you're here for this explainer today because our goal is incredibly straightforward. We're going to take accounting, rip off its scary spreadsheet monster mask, and completely transform it into your absolute everyday financial superpower.
All right, let's just dive right into the deep end with a massive question. Why on earth doesn't your profit match your bank balance? It is the absolute core frustration that leaves so many incredibly smart freelancers and small business owners feeling totally lost. You work hard, you make sales, your accountant tells you that you had a phenomenal month, but then you check your banking app and the money just isn't there. It literally feels like a magic trick, right? And not the fun kind. But I promise you, it's not a trick. It is simply a language barrier, and we're about to break that barrier down right now.
See, there's a massive disconnect in how all of this is taught. Traditional courses just want to hit you over the head with this robotic textbook jargon. Debit, credit, trial balance, snooze fest, right? You're left sitting there wondering how this even remotely applies to your actual life. But the reality? It's much warmer and way more intuitive. Think about your everyday life, stuff like ordering your morning coffee or paying your rent. That energetic day-to-day reality, that is where accounting actually lives.
The truth is, accounting is literally everywhere around us. It's happening right at this very second. When you order that morning coffee, the cafe is actively recording income. When you send off your rent check, you're officially recording an expense. When that direct deposit for your salary hits your account, boom, that is revenue being recorded. And when you open up your banking app just to check your balance and make sure everything looks okay, congratulations, you are doing basic reconciliation. The problem really isn't that accounting is this foreign alien concept. The problem is nobody explains it this way. They just make it needlessly complicated.
So, to clear up this confusion, we're going to use a really simple three-layer system today. Step 1, the fundamentals. Step 2, the day-to-day. And Step 3, the modern angle. Let's systematically break this whole thing down.
Okay, layer 1, the fundamentals. We are going to completely strip away the fear surrounding these basic concepts.
Let's start by reclaiming a classic piece of jargon, asset. What is an asset? Honestly, it's simply something you own. That is the whole shebang. Take your smartphone, for example. You bought it, you own it, it has value to you. That makes it an asset. When you take this intimidating business word and anchor it to a highly relatable, everyday concept, it suddenly loses all its power to confuse you, doesn't it?
Next up, let's demystify liability. Now, a liability is just something you owe. Think of a debt you carry, like a student loan. You borrowed the money, and now you have an obligation to pay it back. By defining it this simply, the jargon instantly feels totally harmless. You own your phone, that's an asset. You owe on your student loan, that's a liability. Actually pretty simple, right?
Moving right along to layer 2, the day-to-day. It's time to tackle that infuriating dilemma of having a profit on paper but zero actual cash.
Picture this. Scenario 1, the freelancer's dilemma. Imagine you're a hardworking freelancer. You just finished a huge project for a client today. They're thrilled, over the moon, and they promise to pay you for your hard work, but not until next month.
Let's throw a number on that to visualize it. The client promised you 5,000 rupees. Now traditional accounting steps in here and asks a very specific question. Did you earn the money yet? And the answer is absolutely yes. You did the work today. So you record that 5,000 rupees today as revenue. Even though you're staring at your wallet and you know for a fact you haven't received a single dime of actual cash yet.
And right here, this is the exact confusion we're trying to solve. Your profit statement is proudly screaming, hey, you made 5,000 rupees. But your bank balance? It says you have zero, nada. This is what we call accrual accounting. You record the transaction when the work is actually done, not when the cash trades hands. This is exactly why your profit statement and your bank balance will almost never perfectly match up. It's not a mistake, it's just a timing difference. Let's switch gears. Scenario 2, the small business owner. Imagine you run a bustling local cafe. Business is booming, so you decide to make a major equipment purchase just to keep up with the daily rush. You go out and buy this brand new, absolute beast of a coffee machine, and it sets you back 100,000 rupees. That is a massive hit to your bank account today. So, here is the million-dollar question.
when you're doing your books for this month is that entire 100,000 rupees recorded as an expense today.
Well, actually, no, not even close. Because that shiny new coffee machine isn't just a regular expense, it's an asset. You're going to use it to make coffee for, what, the next 5 years? So we use a neat little trick called depreciation. Depreciation is really just honest accounting. It takes that initial cost and spreads it out evenly across the 5 years of the machine's useful life. It stops your business from looking artificially bankrupt in month 1, and it accurately reflects how that machine creates value for you over time.
All right, final one. Scenario 3, the investment decision. Imagine you aren't the one running the business this time. You're an investor trying to choose whether to buy stock in company A or company B. You really need to know which one is the smartest choice.
So you pull up their financials, and Company A shows a very impressive 10 crores in profit. Meanwhile, Company B only shows 8 crores. If you're just glancing at profit, Company A wins hands down, right? But hold on a second. Look at that debt column. Company A is lugging around a massive 50 crores in debt. Company B, literally 0. Suddenly, company's higher profit is completely overshadowed by that massive, looming liability.
So the absolutely crucial takeaway here is that in the real world of investing, raw profit often becomes kind of irrelevant if you don't have the full picture. You need the investor's toolkit. You've got to understand concepts like leverage, solvency ratios, and cash flow statements to see if the company can actually survive the debts it owes. And remember, these tools, they aren't mystical Wall Street secrets meant to keep you out. They are literally just highly organized information designed to give you clarity.
Which brings us to layer 3, the modern angle. Honestly, let's just declare the dusty filing cabinet officially obsolete and look at what is actually trending right now.
The finance world in 2024 is moving unbelievably fast. Just look at the trends shaping the industry right now. We've got real-time dashboards. Tech giants like Netflix and Amazon are tracking their cash flow with the same speed and intensity as a live multiplayer video game. We've got AI automation, which is rapidly replacing all that tedious manual data entry, finally freeing up professionals to do actual strategic thinking. We have ESG reporting because companies today are being graded on their environmental and social sustainability metrics, not just their raw profits. And of course, the cloud accounting revolution, which means your financial data is secure, updated instantly, and accessible from literally anywhere on Earth. And that brings us to the ultimate goal of all of this: developing your financial superpower. Whether you're a small business owner currently drowning in financial confusion, a student trying to make sense of painfully dry textbooks, or honestly just a curious individual seeking some financial literacy, this superpower is built for you.
That's the core promise of this explainer format. We deliver these massive concepts in under 10 minutes. No fluff. We use real-world examples that you actually recognize and care about. We cover the trending topics that matter today. And most importantly, we always focus on the why before the how. Because when you finally understand the context, when you get why double-entry bookkeeping even exists in the first place, the mechanics of how to do it suddenly just click into place. I want you to remember this quote: "Accounting isn't hard. It's just been explained hard." It is so incredibly true. Once you strip away the gatekeeping jargon and connect it to your daily reality, the fear just evaporates. You move from total confusion to absolute empowerment. You are perfectly capable of mastering this stuff, for sure. So, as we wrap up this explainer, I want to leave you with one final provocative question. What is the biggest accounting mystery still standing between you and your financial success? Really think about it. Engage with your money. Don't shy away from the numbers just because they look a little intimidating at first. I hope this deep dive sparked your curiosity and left you genuinely hungry to learn more. Keep asking those questions, keep learning, and hey, as always, thank you so much for joining me today.